How can this man's one single decision cost him billions of dollars? Imagine being the co-founder of Apple Computer and walking away with just $800. Intrigued? Let's dive into today's remarkable story. Welcome back to WellPodX. Tony here. Today is 13th of March 2025. Here on this channel, we break down everything related to money, investing, crypto, and psychology. If you want to stay ahead of finance, be sure to subscribe. Now, let's get into today's market update. Bitcoin is currently trading at $83,000, up 1.5% from yesterday's close. Ethereum stands at $1,870, which hasn't changed too much in the past 24 hours. Over in the stock market, Apple is at $217, while Tesla is at $248, up over 7% from previous close. Alright, let's get into today's morning deep dive. When you hear the name Apple, two figures usually come to mind immediately: Steve Jobs and Steve Wozniak, the dynamic duo who revolutionized personal computer. But what if I told you there was actually a third co-founder, a man who had an equal seat at the table when Apple was formed, yet walked away from what would become one of the most valuable companies in history? That man was Ronald Wayne, and his story is one of risks, decision-making, and unpredictable twist of entrepreneurship. Back in 1976, Apple was just an idea shared between three men: Jobs, Wozniak, and Wayne. Jobs was the ambitious salesman, Wozniak was the engineering mastermind, and Wayne, the eldest of the three at 41 years old, was the steady hand, the experienced engineer who had already navigated through rough waters of starting the business. In fact, Wayne was the one who drafted Apple's first official partnership agreement, designed it as first logo, a far cry from the sleek, beaten Apple that we know today. And he even wrote the user manual for the Apple I. But then, just 12 days later, Wayne made a decision that would define his legacy. He gave up his 10% stake in Apple for just $800. So why did he do that? The fact is, he's feared of financial ruin. Unlike Jobs and Wozniak, who were young and willing to take risk, Wayne had asset on the line. He had indeed already experienced failure with a previous business. And Apple, at the time, seems like quite a big gamble. The company has just secured a deal with the Bite Shop, a retailer known for delaying payment, and Wayne was worried that if the business failed, he'd be held personally responsible for its debt. Now, let's fast forward to today. If Wayne had held on to that 10% stake, it would be worth over $200 billion. That's right, billion with a B. It's the kind of financial what if that keeps investors up at night. But here's the twist. Wayne claimed that he didn't regret his decision. He's spoken in interviews about how wealth was never his goal. And that's his choice that brought him peace of mind. He even turned it down an offer to buy back shares later down the line. So what can we learn from Ronald Wayne's story? Media has called him the unluckiest man in the world. First, risk tolerance is deeply personal. Not everyone is built for high-stake world of startups, cryptos, and that is okay. Second, the future is unpredictable. Apple, like any startup, was far from a sure bet in the beginning. And finally, success isn't just measured in money. Wayne may not be a billionaire, but he's content with the life he chose. At the end of the day, you just need to know who you really are. Ronald Wayne's story is more than just a cautionary tale. It's a reminder that in life and businesses, every decision we make is a reflection of our priorities. Some of us chase fortune, others seek stability. But whatever path you choose, make sure it's the one that you can live with. It's like Amazon, which we talked about in yesterday's video. And who do you think is the biggest winner of this stock? Of course, it's Jeff Bezos. He held on to his share for decades, only starting to sell in recent years. While Amazon is now seen as a blue chip, stable stock worth holding long term, it wasn't always an easy ride. If we look back a little, there was massive pullbacks, 30% and even 50% at times. And it takes serious discipline to keep investing in those moments of fear and uncertainty. But that's exactly who gets rewarded at the end, the patient investors. We'll make money from who are impatient. If every single person had the discipline to hold, there wouldn't be as much opportunity. And that's the same reason why, despite Bitcoin's incredible growth over the years, so many people still manage to lose money investing in it. The market rewards patience, and history keep proving it. Now let us get into today's top news. The first news, Goldman Sachs has just lowered its year-end target for the S&P 500 down to 6,200. They're saying there's concerns over slowing economic growth and weaker than expected corporate earning. This revision signals a more cautious outlook of the broader market. as analysts weigh the impact of interest rate, inflation, and global economic uncertainty. While the S&P 500 has shown gain this year, Goldman's move suggests that they see potential headwinds down the road. I would probably take this with a pinch of salt, because investment banks change their year-end target all the time, and if we look back, they are rarely actually right. The second news: how can we make news great again without mentioning Trump and Elon? A new photograph just revealed that President Donald Trump's handwritten note mentioning Tesla's pricing strategy, sparking speculation about potential policy moves that could impact electric vehicle market. The note specifically mentioned that Tesla can be purchased as low as $299 per month or $435K. With Tesla's stock price already faced crazy volatility lately, this development has added another layer of uncertainty for investors. What is your thought on US President becoming a car salesman? Share your comments down below. The third news: analysts are concerning about a possible retracement to 70,000 for Bitcoin. Wow, analysts does concern a lot. I wonder if they have any hair left at the end of a workday. Short-term volatility is being driven by external factors, including regulatory development and broader market sentiments. However, most experts agree that the long-term outlook for Bitcoin remains bullish, and periods of retracement are a normal part of any sustained rally. As always, patience is key in crypto market, and seasoned investors see this dip as opportunity rather than red flags. Okay, that's the end of today's news. If you want to stay ahead in all news related to money, be sure to subscribe for daily updating weekdays. Thanks so much for watching, stay invested, and I'll see you tomorrow.